Yo, what up traders? Welcome to the TBX Trading Mentorship very first video. And in today's video, we're going to be talking about the introduction to what you're going to be learning in this trading course. So my name is TBX and I'm going to be taking you through this course. So this is the book we're going to use to cover the first week of this mentorship. It is called The Basics of Forex Trading. So most of you that have actually paid for it should have gotten it by now. And those of you that haven't, you can easily just click the link below in the description below, then you can get it off Amazon. So these are the content we are going to treat throughout this week. So we're going to treat all this content throughout this week. Yeah, so this is just the acknowledgement of the book. So and dedication to anyone who wants to learn the basics of forex trading. So like I said, my name is TBX. Yeah, some do call me Benjamin X. So TBX just stand for D Benjamin X, and all of this doesn't really have any meaning like in relation to forex. So but let's jump to what actually has meaning to forex, and that is what is forex. So here we have what is forex as a question. Forex stands for foreign exchange. Period. Foreign exchange. So forex is just an acronym for foreign exchange, and that's all you need to know about for like literally like the meaning of forex. So the forex market is actually the largest market in the world with over 5 trillion traded in one average trading day. You can look this up for confirmation. That is, in an average trading day, there's over $5 trillion being moved in the market, in the forex trading market. So $5 trillion. Okay, yeah. So um in the forex market, we trade something called currency pairs. And don't forget about this word called currency pair. It is actually very, very important. This is going to be what we are trading. I said earlier that forex market, in fact, we trade over $5 trillion daily. Not a particular trader trading $5 trillion. Very, very sorry. Let me pause this a little bit. Sorry about that. My throat was getting somehow. Yeah. So not one trader trading over $5 trillion. I mean, the total amount of money being moved in the market is over $5 trillion, and we trade currency pairs. Just remember that. So, and how do you make money in forex market? Well, it's as simple as buying and selling. What do we buy and sell? We buy and sell currency pairs. Don't forget, I said you shouldn't forget about currency pairs. So, how do you buy and sell currency pairs? Well, everything is going to be answered in this mentorship. So, for example, now what is a currency pair? Currency pair, this is an example of a currency pair. So, what's actually a currency pair? A currency pair is just the pairing of two different currencies. You understand, like the name implies. So, if you look at this very, very carefully, you see that this is a pairing of European dollars, that is, European dollars with United States dollars. Just take it like that. So, this is a pairing of euros to US dollars, and it's assumed. So you're actually going to do more reading because I can't really explain every single line in this book. So I'm just going to explain the basic stuff that actually stand out. So for instance, and I just want to explain the concept of how you make money. So for instance, if EU, which is a short way of writing Euro USD, so is if the price of EU is 1.0878, that is, if you need that, this means that you need $1.0878 to get €1. That's why this concept is going to be explained later on in this course. When you guys we're going to talk about something called bid and the base currency and the quote currency. So when we're talking about the base currency and the quote currency, you're going to understand this better. But let me just say it like this: you need an X amount of this to get this. It's as simple as that. So you need you need 1.0878 US dollars to get €1. So that's the reason why this one is in the front and this one is in the back. But when we get to the concept of base and quote currency, you're going to understand all of that even better. So now let's continue with this about analogy. So you need so it means you need $1.0878 to get €1. We'll get into more about that. So let's focus about the money. Okay. The exchange price of any given currency or pair or asset is never static. So this is how we actually make money from forex. The exchange price of a particular currency pair is never static. So this price, this 1.0878 is actually never start. Every single second, the price changes almost every single second. So by the way, this is actually a short version of the original video. So I actually have a video explaining every single thing I'm going to explain in this video already uploaded in the mentorship, but that one is over 15 minutes long. So I just want to make a shorter video for those of you who don't like watching long videos. So we are currently at 5 minutes, so you permit me to be checking the time regularly so that we will know how far we are going. So the aim is for this video not to be longer than 20 minutes. So that's the reason why I'm even talking a little bit faster. But I can assure you that you can't get the same knowledge you're going to get here as is going to be in the other video. So as I was saying, so the price of a currency pair is never static. It changes every second. So that is, it can increase and decrease. Since the price is not static, it means that this can become 1.087 and it can become 1.0877. So if the price can increase or decrease, as a forex trader, your work is to predict the next change in price. You are here to predict what the price is going to become next. So if you predict that the price of Euro USD is going to increase and you buy more of Euro USD, then if the price increase as you predicted, you make money. And if the price if you predicted that the price is going to fall or decrease, maybe it becomes 1.0777, for instance, that is lower than this. So you end up making money if you put in your money into that prediction. You're going to understand more about this later on. So let us skip all this. So yeah, we're talking more about currency pairs. So let's talk about currency pairs. As you can see, this is a base currency and this is a quote currency. So what is a base currency and what is a quote currency? So a base currency is actually, let's call it the stronger currency, or let's call the quote currency the weaker currency. In short, you actually need an X amount of the quote currency to get the base currency. So let's jump into trading view right now. Let's jump into trading view right now. So this is actually a trade we took today. It's actually very, very nice. Nice 1 to 6 risk to reward ratio. We actually made a lot from that. So let's jump to business. So this is what we call a currency pair. This is Euro USD. As you can see, Euro USD. So we actually need a certain amount of Euro, of an X amount of US dollars, that is this USD, to get this Euro. So that's why this is the base currency and this is the quote currency. So let me just change this real quick. Yeah. So you guys are not going to get this. So let me just go back to the video so you get it better. So and although we have some aberrations, and those aberrations, they usually come in pairs like JPY pairs, some no, not JPY pairs. We have some AUD pairs, but not sorry, we're going to talk about that later on. So this is the names of each currency pair and each pair of a currency pair, or I don't know if that makes sense. Each pair of a currency pair, so that you can easily name currency pairs. For instance, this is AUD. It's called Aussie, or the Australian dollars, and this is CAD. This Canada, the country Canada, is also dollar. Well, nickname Looney. So personally, if I want to call AUD card a currency pair of AUD card, I can call it Aussie card or Aussie Looney, whatever I feel like. So personally, I actually prefer calling them just calling them out like Euro USD or EUR USD, GPP JPY, CHF JPY, USD card, and stuffs like that. So let's jump into the next chapter. So I've got to pick this real quick. So this we're going to jump into the next chapter like that. So the next chapter is types of forex traders. So on this chapter, I'm just going to make you identify yourself, just to help you know what you identify as a forex trader. Yeah. So and this I'll personally give you this advice not to try to look at any of this and try to force any of this into yourself. For instance, don't be like, okay, I like this, I like this, I like this, I want to be this kind of trader, I want to be this kind of trader. From experience, I think the kind of trader you're going to become will actually choose you. For instance, if you're the kind of person that loves to hold investment for a very long time, or you prefer to hold trades for a long, or you prefer to do stuff that lasts longer, you prefer to hold on to stocks longer. You might want to go into stocks like swing trading. In short, the type of person you are will determine the type of trader you're going to be. So let's just quickly skim through the classification and types of forex traders. So I personally like to classify forex traders by time frame, and that is we have the scalpers, we have the swing traders, we have the not the scalper, we have the swing traders, we have the I think everything is up here. Oh my god, yeah. By we have the scalpers, we have the swing traders, we have the day traders, and we have the position traders. So I'll just quickly explain. Every single thing is explained into details in the first video, but I'll just quickly explain everything here. So scalpers are just traders who like to trade in a very, very short term. That is, they like to get out of the trade as soon as they have gotten in. They don't like to trade old trades for long time. So they actually hold trade for the shortest time ever. Some scalpers hold trades for 5 minutes, 10 minutes, 3 minutes, 2 minutes, even 1 minute if possible. So they just like holding trades for a very short time. They just get in, get out, get in, get out. So while we have day traders are traders that they actually can hold trade longer, but they don't hold trades more than 24 hours. Anything more than 24 hours, they close their trades. So they are most of their setup. Although the type of trades they are going to get that will determine how long the trade is going to last. Also depends on the kind of strategy you use. You can't just place a trade somewhere and just expect it to eat your take profit in 3 minutes or to eat your targets in 3 minutes because you choose to become a scalper. Now, the kind of strategy you are going to use also determines how long your trade is going to take to execute. So we have swing traders. These guys don't mind holding trades for long term. They can hold trade for weeks, even a month or two. You understand? These are actually they are like short term investors. They can hold trade for a very long time. They can hold trade more than a day. I'm not saying they are not going to have dope trades that hit their target in less than 24 hours, but they still prefer holding trade. They are comfortable holding trade for more than a day, two, three, and the likes. While position traders are known as investors, these guys can hold trade for 6 months, a year, 2 years, 3 years, and the likes. So classification of forex traders by analysis types. So we have the fundamental traders, we have the technical traders, and I think we have the sentimental traders, but I know nothing about that and I've never used it before in my life. So I'll just stick to these two. So personally, fundamental analysis trading is just trading using fundamental analysis. And what is fundamental analysis? That is using the news to trade. When you are trading with news, you're actually using fundamental analysis. So technical analysis is when you are using trading tools and indicators and trying to use when you are using price action in general to analyze the market. Don't worry, we are going to understand all of this later on. So the next we're going to look at this classification by strategy. I hope I'm not too fast. I actually hope I'm not too fast. So but don't forget that there's actually a longer video of this, a 15-minute video of this. So you can watch the long one or you can just watch this short one. So if you want to actually watch the short one, you have to actually read the book more. You understand? So to actually get a better grasp. And don't worry, if you have any question, just comment the question in the comment section below, and your question will be treated either in a Zoom class or will be treated in the next video. So the naked classification by strategy, and that is for technical, not for we have by analysis type, that is strategy also. So we have the fundamental and technical. So I'm actually a technical trader, so I don't really know much about fundamental trading. So I'm actually going to stick to only technicals. So classification by technical, of strategy by technical, we have the indicators based traders. These are traders that trade with only indicators. What are indicators? These are mathematical algorithms used to analyze market. They actually do the analysis for you. They're actually more of automatic. They do every single thing for you. They are not AIs, not robots trading for you, but they're just algorithms showing you where to enter, where to get out, and stuff like that. So I actually don't really use them like that. We have naked price action traders. These are traders that use solely price and action. They use the action of price to trade the market only. And we have mixed price action trader. I think I'm a mixed price action trader. These are traders that use both indicators and price action. So as I said earlier, the type of person you are in real life will determine the type of trader you are going to become. So let us jump to the next. So they all have pros and cons. You can check them out in the book. So the next chapter, that's forex trading sessions. So let us check the time if we are still okay. We have 5 more minutes. This is 15 minutes. We have 5 more minutes to round up this last chapter. So we have forex trading sessions. What are forex trading sessions? Now the same thing, thing when you are in a class. When you're in school, we have different times. Or how would I put it? There's something. I don't know. I was once a timekeeper in my secondary school, and I was the timekeeper. So we actually ring the bell to change a particular period. So each period has different times for throughout the day. So you don't just go to school throughout to study just one topic, one subject for an entire day. Throughout the 8 hours you I think you spend in the school, there are different times or different subjects that are going to come up in different times. So the same thing in forex. Yes, the market is open 247. Forex market is open 247 throughout the trading week, that is Monday to Friday. But we also have different trading sessions. That is, when I say market, it is not only just one market. We have several markets inside the forex market. So there's a very, very nice supermarket analogy I used to explain the forex trading session here. So you can actually read up the supermarket. I use a supermarket to actually explain it. So because of time, I'm not going to read it out. And actually, as fast as I talk, I'm actually a very slow reader. So um just read all this. You're going to understand the concept of the trading session itself. So let's just go to types of trading sessions and the times they open and the likes. So we have the forex market hours. These are the three types of trading sessions. Actually, these should be types of trading sessions. This is the Sydney session, the Tokyo session, aka the Asian session, the London session, the New York session. So what does the effect what is the effect of these trading sessions during how does the trading sessions affect the market? Well, the sessions affect different pairs different ways, and it actually affect the market in different ways also. For instance, when you go to I'm a Nigerian, so we usually have these sports during Wednesdays in my secondary school days. We have sports just before the short break. So when you ring the bell for sport, you actually see a lot of students outside their classes in the school compound. So that period affected the school in what way? It brought out a lot of almost every single student to the school compound. But after the sports period, most of the students go back to their classes. When you ring the bell for break, you see a lot of students coming out of their classes again. Then when you ring the break, when we ring the break and the bell for break over, then we see students going back to their classes. It's the same thing here. Different market. There's certain markets where price moves seriously, and there's certain markets where price just move continuously in a place. So like for instance, this Tokyo session, aka the Asian session, it actually affects mostly Asian peers. That is peers that it actually affects mostly Asian peers like JPY peers. That's the JPY means Japan. So most of the times Japan only JPY pairs are actually very fluid during this time. Most other pairs are actually like just moving up and down, just consolidating, moving up and down, up and down, up and down. So why during the London session, sometimes price spike, sometimes price take out liquidity before spiking. Same thing during the New York session, and the likes and the likes and the likes. Don't worry, I'm going to learn more about this as you continue. So the what times do the same thing, as you have different subjects on a day, and we have those different subjects are subjected to different times of the day when you're in school. These different market hours are subjected to different times of every day of every week. So these are the time. This is Nigerian time. So you can, oh, I don't really have the link. I think I'm going to drop a link. Let me check if I, yeah, this is the link. I think this is the link. So I'm going to drop this link in the description where you can easily check your the different market hours in your own country. So if you're a Nigerian, this is it actually. So this is it. So sometimes daylight saving applies because currently Currently, Sydney actually opens by 6 a.m. Currently, it is actually 6 a.m. and not 7 a.m. That's because of daylight saving. So it changes regularly. But if you're actually not going to use it like that. Personally, I only take note of theory, theory trading sessions. But also, we're going to talk about those later on in the video. So I think that is enough. I think that's all for this video. We're going to talk about what is a pip in the next video. So how did we do? We talked about everything in just 20 minutes. Yeah.